How are you guys doing? This is Ryan. Welcome back to the channel. It's been about 4 days since Tesla did their battery day on September 22nd, and I'm sure a lot of people here have already heard about it, but I've spent the last 4 days really going over the event, and I really believe one thing is really being overlooked, which has made me extremely bullish about Tesla. And I'm not going to pretend to be some kind of battery engineer or physicist or anything. I can't tell you exactly why this new 46 by 80 milliliter battery cell will be much more effective than the current 21 by 70 battery cell. Like, I've tried to watch Sandy Monroe videos and really try to understand the physics and all of it and why this is so revolutionary, but as a businessman I walked away super optimistic that Tesla is going to dominate the next 10 years in car sales. And this really hit me during the Q&A section, and I had like a revelation understanding that Tesla is dominating their master plan. So I'll play the clip for you right here.
Hey, can you guys hear me?
Yeah.
This is Jordan from Mark Asset Management. So you've talked about the importance of the factory, and you've mentioned the ground-up design process and a lot of the new things that you're going to be doing or started to do in Shanghai, Berlin, and Austin. Can you just maybe help us understand and quantify like how financially meaningful all of those improvements will be? And then given what you're trying to accomplish as a company, is it fair to assume that the vast majority of improvement will be given back to the customer in the form of lower prices?
Yeah, I mean, I think certainly we will try to give back as much as possible to the customers. It's not like, it's not like Tesla's profitability is crazy high. Our average profitability for the last 4 quarters is like maybe 1%. So just to be clear, it's not like we're minting money. Our valuation makes it seem like we are, but we're not. We do want to try to make the price as competitive as we can without like losing money. And if you lose money, then if you keep losing money, you'll just die. So we have to. This thing called profit is just like we need to bring in more money than we spend, otherwise we're dead.
But affordability is key to how we scale,
yeah.
right? Like the demand goes non-linear as you reduce the price of the car.
Yeah, I mean, it's important to sort of separate the difference between affordability and value for money, or desirability of the product. So, for a lot of people, they want to buy a Tesla, they simply don't have enough money. We could make the car infinitely desirable, but if somebody does not have enough money, they can't buy it. Sometimes, people, kind of forget this. It's like, it's like people have to have enough money to buy the car, and just making a car super desirable but expensive does not mean they can afford it. So it's absolutely critical that we make cars that people can actually afford.
After listening to Elon Musk answer this question, it really brought me back to a Jeff Bezos quote, and that is, "Your margin is my opportunity." Tesla's profits being about 1% isn't a reflection of the company's inability to sell vehicles at a gross profit margin. But in fact, Tesla's 1% company profit is allowing it to produce best-in-class vehicles and outselling and dominating those markets. The Tesla Model 3 is by far the most outselling luxury sedan in the world. Now, the innovations in battery cell technology and Tesla getting involved in the manufacturing process and the mining process and really securing the entire supply chain. When you look at things that we've already talked about on this channel, like Wrights law, and Wrights law came around when airplanes were being massively produced back in the 1930s, and it simply stated that every time you double your production load, you're able to cut costs by 10 to 15%. And it's abundantly clear that Tesla is accomplishing these economies of scale. When they first started selling vehicles, they were only selling vehicles well over $100,000, and now they're down into the $30,000 price point, and now they've announced that they're going into the $25,000 price point in a few years. And while it's very important to be profitable, it's what you do with those profits that really counts. So when people complain about Tesla's crazy, insane price to earnings ratio, that is because so much of that money comes invested back in the company to create scale, to take over the industry. You're paying for that future growth. And companies that have huge earnings, it's really because they lack the ability on how to better invest that capital for future growth. So I love dividend stocks, but companies pay dividends because they don't know how to grow their company anymore. So I think there's a lot of similarities between Amazon and Tesla when we look at things like this. I even feel like right now we're in an EV bubble, almost like we're in a dot-com bubble back in the late 90s. And I think Tesla is the Amazon of the EV bubble. There's a lot of companies out there like Nikola Motors, which is a scam company, that can create a $30 billion market share with just selling the public a business plan. And there's so many other startups right now that are going ballistic in the entire EV market, but so much of it is going to be garbage. Disclaimer, none of this is financial advice, but be very careful in chasing some of these electronic vehicle stocks that have really no proof of concept. Just like you should have been wary about these things during the dot-com bubble. But there were some solid horses to ride. Amazon became a $30 billion company during the dot-com bubble, and people thought that was insane, and even Jeff Bezos thought it was insane. And now they're a $2 trillion company essentially. And even being the great company they were trading around $113, and they dropped all the way down to a $6 stock. So I don't know if we're in that kind of market. I think if we're comparing the two industries, it's fair to point those things out. So be careful. But Tesla's mission and proof of accomplishing excellence is a big reason why I'm so excited to see the next steps for the company. And that Elon is rewarding customers and consumers with newer products that are at lower cost rather than dividends or huge profits to show off to Wall Street. He's giving that all back to the consumer. And if Tesla can even scale these new battery cells, they're even gonna license them and sell them to other companies, because the company's true mission is to accelerate the adoption of sustainable transport. I find it so fascinating that Wall Street sold off the stock after Battery Day because there wasn't any instant gratification. Most of the things Tesla announced were years out. So you have to understand Wall Street is much more short-sighted. If you manage funds for another person, you're really judged on like annual performance. So there's nothing glaring there for Wall Street to say, hey, buy Tesla stock now, they're gonna make huge profits and they're gonna have great Q3 and Q4 earnings. There was nothing on that day to accelerate that. But this is really a big way that investors can beat Wall Street in a lot of ways, is that we can have a longer time horizon on our investments and capitalize on lower prices today. And also I'm hearing whispers around that the technology actually might be closer than we realize for this new battery cell production that's gonna go into the Semi, the Plaid Model S, Cybertruck, and I'm assuming the new $25,000 model car coming out. And it's thought that Tesla did not want to oversell its new battery cell technology and have people sit on the sidelines and not buy cars today, instead waiting for that future technology to come out and buy that. It's called the Osborne effect. And I actually learned that the Osborne effect comes from a company that was called Osborne Computer. They kept on touting how there's new advancements in their computers are coming out in a year, they're gonna be amazing. And so no one bought their current computers and the company went bankrupt. So that's something new that I learned throughout this process, that you can't oversell new technology. So could Tesla actually be sandbagging it and instead holding back information to keep its current cash flow and the company safe? But to touch on this new battery cell a little bit more, it's going to be able to decrease cost by about 50% and increase range by about 16% and bring charging times down to 5 to 10 minutes on a supercharger, which I think for a lot of people who are sitting on the fence and have some reservations about buying Teslas, it's gonna open up the market a little bit more to people who fear the long charge times or that have range anxiety. And then also just the prices dropping is gonna allow the sales to go non-linear, because like Elon Musk talked about, there's a lot of people that wanna buy Tesla vehicles that just don't have enough money, or they could just be more frugal and it doesn't fit their economic budget. But owning an electric vehicle saves you a lot of money on fuel costs, on oil changes, on regenerative braking, and there's just a lot less parts that go into it, a lot less things that can break. So I think this is very bad news for legacy automakers like GM and Ford. These companies are very behind in technology and they're also behind in scale. They don't have the sales to bring down the costs in their battery vehicles. So they're likely gonna have to sell cars at a big loss just to get any kind of market share. And Tesla, like Amazon, is going into every class of cars and they're absolutely dominating them, and that trend is likely to continue. And I really think you're gonna see a major automaker here in the United States go bankrupt because they just won't be able to adapt fast enough to create enough volume and scale to compete in the market. They're gonna be stuck trying to sell inferior technology at higher prices. It's just not gonna work. And if you guys have made this far in the video, please make sure to give it a thumbs up. And if you don't mind subscribing to the channel with the notification bell on, it really means a lot. I make a lot of Tesla content, investing content, and would love to have you guys join the journey. And that thumbs up button really helps this video reach a broader audience, and it just really means the world to me. But let me know your guys' thoughts down in the comment section. What did you think of Battery Day? I know my analysis is a little bit different, but it really just jumped out on how unimportant profit margin is to a growing business, and why people need to stop really focusing on that when they look at a high growth company like Tesla. Tesla has no shortage of ideas on how to grow and scale. They even talked about doing HVAC systems for homes. In their vehicles, they have a special HVAC system. I have a Tesla Model 3. I guess they gotta change some filter every 2 years or something. But there's so many things they can disrupt, and they're massively recruiting new talent. I feel like Battery Day was a huge recruitment activity to get the best engineers to come out and continue to evolve and adapt battery cell technology and help Tesla change the world into sustainable transport. And the last thing I'll add is that Tesla announced they're gonna do a huge game-changing update to their autopilot technology. So I have Tesla Model 3 with full self-driving capability, and I'm super excited to see what this next update is, and I'll be covering it here on the channel, so make sure you stay tuned for that. And if also you wanna follow me on Instagram, I post there pretty much daily. I put my handle here, rgiffin89, and that's all I got for this week, guys, but I'll see you in my next one.